The Federal Open Market Committee concluded a two-day meeting earlier today. As always, my colleagues and I reviewed recent economic and financial developments and discussed the economic outlook. The data since our January meeting have been generally consistent with our expectation that the fourth quarter pause in the recovery would prove temporary and that moderate economic growth would resume. Spending by households and businesses has continued to expand, and the housing sector has seen further gains. The jobs market has also shown signs of improvement over the past 6 months or so. Private payrolls are growing more quickly, total hours of work have increased, the rate of filings of new claims for unemployment insurance has fallen, and the unemployment rate has continued to tick down. However, at 7.7%, the unemployment rate remains elevated. The committee also remains concerned that restrictive fiscal policies may slow economic growth and job creation in coming months. We continue to monitor the recent increases in gasoline prices, which appear to be due mostly to passing factors such as refinery shutdowns for maintenance. Apart from temporary variations in energy prices, inflation is running somewhat below the committee's longer-run objective of 2%. Importantly, longer-term inflation expectations remain stable. Overall, still high unemployment, in combination with relatively low inflation, underscores the need for policies that will support progress towards maximum employment in a context of price stability. In conjunction with this meeting, the 19 participants in our policy discussion, the 7 board members and 12 Reserve Bank presidents, submitted individual economic projections. As always, each participant's projections are conditioned on his or her own view of appropriate monetary policy. To summarize, the participants' projections for economic growth have a central tendency of 2.3 to 2.8% for 2013, rising to 2.9 to 3.7% in 2015. The central tendency of their projections of the unemployment rate for the fourth quarter of this year is 7.3 to 7.5%, declining to 6.0 to 6.5% in the final quarter of 2015.